Namaste and good morning. Welcome to the 16 Daily Brief, your daily dose of business news that matters. I'm your host, and today is Monday, March 23rd, 2026. Let's dive into what's moving the business world today. And let me tell you, it's been a brutal day on Dalal Street. So grab your chai and let's break it all down. First up, here are today's top headlines. Headline 1. Sensex crashes over 1,800 points as the US-Iran conflict in the Strait of Hormuz intensifies. The Nifty closed below 22,600. Headline 2. The Indian rupee hit a fresh record low of 93.94 against the US dollar, with Brent crude hovering above $110 a barrel. Headline 3. Good news for MSMEs. The government has amended the Mutual Credit Guarantee Scheme, expanding coverage to the service sector and offering special benefits for exporters. Now let's take a deeper look at the big story of the day, the market crash. The Sensex ended the day down 1,837 points, or about 2.5%, closing at 72,696. The Nifty 50 fell 602 points to settle at 22,512. Investors lost nearly 15 lakh crore rupees in market value today alone. So what's driving this? 3 words: Strait of Hormuz. The escalating military conflict between the US and Iran has effectively disrupted shipping through this critical waterway, which handles about 20% of global oil supply. Brent crude is now above $110 a barrel. And for India, which imports over 85% of its crude oil, this is a massive problem. The ripple effects are everywhere. The rupee crashed to 93.94 against the dollar, a fresh all-time low. Foreign portfolio investors have been dumping Indian stocks relentlessly. In March alone, FPIs have pulled out over 88,000 crore rupees. For all of 2026, outflows have now crossed the 1 lakh crore mark. Financial services stocks took the biggest hit, with FPIs offloading over 31,800 crore from that sector in the first half of March. Now, what does this mean if you're running a business? If you import raw materials, components, or machinery, your costs are going up. The weaker rupee means you're paying more for every dollar of imports. If you're in manufacturing, logistics, or food services, higher diesel and fuel costs will eat into your margins. Start reviewing your pricing strategy now. Don't wait for the next quarter. If you're an exporter, however, there's a silver lining. The weaker rupee actually makes your products more competitive globally. This is the time to push your export orders. Moving on to our second deep dive. A genuinely positive development for small businesses. The central government has amended the Mutual Credit Guarantee Scheme for MSMEs, known as MCGS MSME. This is a big deal, and here's why. First, the scheme now covers service sector MSMEs, not just manufacturing. So if you're running a logistics company, a restaurant chain, an IT services firm, or a consultancy, you're now eligible. Second, the minimum project cost that needs to go toward machinery and equipment has been reduced from 75% to 60%. This gives you much more flexibility in how you use the loan. Third, for exporters, there are special benefits: a 75% guarantee cover, a first-year fee waiver, and guaranteed loans up to 20 crore rupees. The upfront contribution for exporters is just 2%, capped at 40 lakh. And here's the cherry on top. The 5% upfront contribution is now refundable. You get 1% back each year starting from year 4, as long as your loan account is performing well. If you're an MSME owner looking to expand, upgrade equipment, or boost exports, talk to your bank about this scheme immediately. The terms are genuinely favorable. A couple more stories to round out your day. Delhi business owners, take note, electricity bills are likely to go up from April. The Delhi government is preparing to clear over 38,000 crore rupees in pending dues to the city's 3 private power distribution companies. This will be recovered through an additional surcharge on bills, spread over 7 years. If you run a business in Delhi with high power consumption, a factory, a cold storage, a restaurant, factor this into your cost projections for the next financial year. Also, a quick reminder, if you're a GST-registered business, the deadline to opt into the composition scheme for FY 2026-27 is March 31st. Similarly, exporters need to submit their letter of undertaking for exports without GST payment by the same date. Don't miss it. On the startup front, Bidzo raised 63 crore rupees in a Series A round led by Bloom Ventures, and EV mobility startup Let's Red secured $4 million. Despite the broader market gloom, early-stage funding continues to flow into fintech, EV mobility, and enterprise automation. So what does all this mean if you're running a business in India today? Number 1, review your costs. Fuel, raw materials, and imported inputs are all getting more expensive. Renegotiate supplier contracts where you can, and consider locking in prices for the next quarter. Number 2, hedge your currency exposure. If you deal in dollars, talk to your bank about forward contracts. The rupee may weaken further before it stabilizes. Number 3, explore the amended MCGS MSME scheme. Whether you're in manufacturing, services, or exports, the revised terms are worth investigating for your next expansion. Number 4, don't panic about the market crash. If you're a long-term investor, these dips have historically been buying opportunities. Focus on your business fundamentals. That's your 16AIN daily brief for today. If you're thinking about buying or selling a business, head over to 16ain.com. That's 16ane.com, where we make business deals sola ane pakka. See you tomorrow.